This is the Equity Management Academy weekly podcast for September 15th, 2021. Gold, stagflation or deflation? Summary. The latest consumer price index just came out and was slightly lower than expected. The CPI increased 0.3% from July. Compared to a year ago, the CPI rose 5.4% excluding food and energy. We want to see the delayed reaction in the gold market to all of these factors, which could be explosive. Looking for a portfolio of ideas like this one, members of Mean Reversion Trading get exclusive access to our model portfolio in Seeking Alpha. Inflation or stagflation? The latest consumer price index just came out and was slightly lower than expected. The CPI rose in August, but inflation appears to be easing. The CPI increased 0.3% from July compared to a year ago. The CPI rose 5.4%, excluding food and energy. Gold. The gold market was choppy today and made a low of 1780.60. It stabbed into the area of support in accumulation of supply, where our AI algorithm, the variable changing price momentum indicator VCPMI, expects buyers to come into the market at these levels. The AI advises not to sell into this area. In fact, there is a 90-95% probability that a reversion will occur from these levels. Such a reversion then occurred, and we ran back up to the target above the mean of 1882. The metals markets have the most bullish fundamentals in history from a monetary point of view, from a monetary policy point of view, with the printing of so much money from an economic point of view, based on supply chain issues and shortages, and from a physical supply point of view. We want to see the delayed reaction in the gold market to all of these factors, which could be explosive. Since the pandemic hit in March 2020, when gold made a low of 1450.90, it has rallied all the way up to 2089. The rally was in relation to the shift in monetary policy when the government announced a massive stimulus package to prevent the economy from slipping into a recession. It triggered a solid $600 move in gold in a fairly brief time. Then gold discounted the potential damage from the pandemic and reverted to wait to see the real damage that had been done to the economy. Gold came back down to 1673 on March 8, 2021. It was a golden ratio retracement. It was, however, against all of the fundamentals for gold. We had never seen such a damage to the economy caused by the pandemic. Yet gold came down. The market bottomed in March 2020. The stock market also transitioned at that time, making the beginning of the virtual economy in which we are in today. The smart money discerned that March 2020 marked a change, and since then, the stock market has gone more than double, except for the yellow metal. Gold rallied from 1673 to a high of May 26 of 1919. It is a technical rally. The fundamentals have been bullish since the pandemic hit, yet gold has come way down and then back up. We are in a long-term uptrend channel. There was another sell-off when the Fed mentioned they were possibly talking about tapering. Metals, stocks, and commodities all fell on the news that tapering might be under discussion. Short sellers came in around August the 9th and tried to break the previous low from last March, but the market reversed and started up again. It activated a major buy signal. The market last week reached 1836, a resistance level, and could not follow through up to the 1852, which was the weekly level of resistance. It fell back to 1820, a weekly level, and activated the VCPMI weekly mean of 1802. We are now trading at a support level of 1780 or 1786. We are looking for a major weekly reversal. For the VCPMI daily signals, gold came down to the levels of support around 1786 to 1777. Then it reverted. It completed the daily target of 1802. The second target is 1809. A close above 1802 will make this resistance level support and activate the 1809 target. It will also activate the VCPMI weekly price momentum. The trend momentum is the 9-day or 9-week moving average, which gives us the big picture, whether it is a bearish trend or a bullish trend. The price momentum identifies the volatility of the price within that trend. If gold closes above 1809, then we are likely to see 1820. We bought at 1791.20, which was the weekly buy signal. We are holding on to that position with a nice profit already built in with a trailing stop.
Are you looking for an automated artificial intelligence trading system? Do you want to analyze commodities and financial markets to determine when to buy and sell? Looking for an indicator to predict future trends in the commodities and financial markets? Welcome to EMA2 Trade Live Signals. Our Variable Changing Price Momentum Indicator, VCPMI, is an automated AI trading system developed and tested over a decade. The VCPMI algorithm is based on age-old vortex mathematics combined with Fibonacci wave theory, trend analysis, pivot points, and several other widely accepted financial analytical methods. The VCPMI can help you take emotions out of your trading and rely on simple mathematics to predict future trends in financial markets. This approach will make your trading more effective, consistent, and profitable. VCPMI algorithm. The VCPMI code points and levels are support and resistance levels and behave exactly like any historical supply and demand level. Therefore, the VCPMI code levels are useful as an index tool for both day trading and for selecting and exercising entries and exits for longer-term traders. Why VCPMI? The VCPMI relies on artificial intelligence to analyze markets and predicts future movements, which seek to determine what a security or commodity is worth at a given point in time. The VCPMI uses technical analysis in the form of mean reversion trading, which seeks to capitalize on extreme changes in the pricing of a particular market based on the assumption that it will revert to its previous state. The VCPMI can be applied to both buying and selling, as it allows a trader to profit on unexpected upswings and save when security or commodity is trading at an abnormal level. Visit EMA2trade.com for more details.